Hi everyone, we are a temporary team called QuantQueen protocol formed during the Binance Blockchain week. I'm Frank from the Matrixport Asset Management team. Alfred is from the Binance Risk Control team, and Miro is a founder of the ZEROBASE. And we are focusing on the yield-based layer problems on the Binance Smart Chain. And here is some problems we found in the market. And first one, BNB chain has many yield opportunity, but few NAV-based assets that are suitable for long-term allocation and reliable collateral. As a result, TVL is heavily concentrated in the short-term high volatility plays, which lead to the weak capital retention and unstable liquidity. And meanwhile, DeFi collateral remain over-concentrated in the small set of the assets, mainly BNB and stablecoin, amplifying liquidation cascades and correlation risk during the market stress. And based on this, these problems, we found some solution and innovation. And we introduced the QQB, a net priced quant yield asset package into a standardized, tradable, and on-chain token. By anchoring price to the monthly NAV settlement, and the QQB provided BNB chain with a more stable yield benchmark asset, while reducing reliance on the stablecoin pages and their depagging risk. And the key innovation is we design NAV as a protocol behavioral, and meeting happen in the NAV redemption is submitted via burn request and settled on the fixed monthly cycle. And QQB turns the TVL into a tradable NAV asset token and can flow into lending and vault and structure product. And let me explain our product. And here is a product workflow. And the product comprises from the three parts. And QQB operates as a tradable NAV share with a monthly settlement engine. NAV is computed off-chain and published through the Oracle, and users interact with a simple protocol flow, mint and monthly NAV price, redeem by submitting a burn request and receive the settlement based on the monthly cycle. Once mint, QQB enters the full circulation and can be traded on-chain water assets, combining the discipline of the NAV-backed asset with the liquidity and the composability of the standard token. They design allow QQB to integrate with the BNB chain DeFi products, such as lending, collateral, yield vault, with structured products. And for this project, the key point is still the risk control. So we set a very, institutional risk control engine. So before we allocate the fund, we will set up the risk set for each fund manager. And we also will detect their real-time risk parameters every time. And if we found their risk parameters breach that benchmark and we set up before, and we will start to negotiate with the fund manager and find the solution. Apart from strategy risk, we also will detect the counterparty risk, which means some of the exchange risk and also market risk, especially when the market is very volatile, and this part risk is very important. And we will also find a solution, like stop trading or do other things. Based on this very important risk control model, we get a very good return in the last 3 years. Let me show you analysis. So here is a long-short statistical strategy. And in the last 3 years, we get over 100 return with a maximum drawdown 15%. This is a very reliable return. And you can also check the Sharpe ratio. And if you see the monthly basis, Sharpe ratio is always over than 3, which means that is the reason we set up the settlement day is the monthly. And here is the NAV curve, is always up. So which means if you buy our QQB, is always up token. You can get a very good return in the future based on the history performance. And here is some analysis about the risk, and we will detect the maximum drawdown, also the leverage and the exposure. Let's go back to the deck. Okay. And finally, I want to share with you about the composability between the BNB and the QQB. And the circle on the left shows BNB external market loop. You can see here. And the high frequency trading. So trading on the DEX and SEX drives fast price discover and recurring premiums and discounts, attract market makers and attributors to continuously provide liquidity. And the circle on the left shows QQB internal settlement loop. The protocol runs monthly NAV-based minting and redemption windows. Redemption trigger burn into the contract supply and fees flow back to Treasury and rolls into the next NAV compute value. Together, one loop governs liquidity and price, while the other ensure the value anchoring and displaying, forming a tradable NAV anchored asset machines. And thank you for your listening and hope it will be helpful on the BNB.